I am here to share our latest findings from 10 years of biotech deal flow data going back to 2015. This is our annual report, and we're gonna start off with some key takeaways. So let's dive in. Biotech venture capital saw a massive shift over the last decade. While generalist funds led the 2018 to 2019 boom, they've pulled back sharply since then. In contrast, specialist funds maintained steady investment levels and are proving more resilient in the current downturn. Let's look at capital deployment trends. 2018 marked the peak year, with biotech deals accounting for 22% of all VC investments. This was mostly driven by generalist funds. Post-2020, generalists retreated, with capital going primarily to safe havens like infrastructure and later-stage opportunities. Specialists, however, maintained a steady level of investment in biotech. 2025 shows the lowest capital raised in a decade, with almost no participation from generalists and a whopping 80% coming from specialists. What about performance? Our data shows that between 2015 and 2017, generalist funds outperformed with an IRR of 36%. Specialists delivered strong results too, but with a slightly lower IRR of 28%. From 2018 to 2020, both saw declining IRRs. However, generalists still held an advantage with a 5 percentage point lead. But it was all short-lived, because from 2021 to 2023, generalist performance collapsed to near zero. Specialists remained stable during this period, maintaining an IRR of almost 12%. Bottom line, specialist funds demonstrated greater stability and long-term performance across all cycles, while generalist returns were highly cyclical and vulnerable to market timing. Now let's examine a few case studies, starting with SoftBank Vision Fund. They entered aggressively in 2018, investing in high-profile companies like Moderna and 23andMe. After limited biotech exit success, they retreated in 2020 and reallocated capital to safer investments. Similarly, Sequoia Capital made targeted biotech plays in the early years, but also pulled back after 2021. They've since reallocated their focus to AI and tech. In contrast, consider Flagship pioneering as a deep biotech builder. They've created over 100 companies, including Moderna. Their platform-centric strategy ensures resilience by focusing on foundational science and scalable business models. Another example is Third Rock Ventures. They take an early-stage, science-focused approach, building companies around novel technology. Their consistent outcomes have resulted in over 30 IPOs and $10 billion of capital raised via M&A. So what does this mean for the future of biotech VC? Well, there are strategic implications for both investors and entrepreneurs. For investors, this analysis suggests that specialist VCs are better positioned to deliver consistent returns and possess deep biotech expertise. In contrast, generalist funds may want to re-enter the space via syndicates or co-investments, or focus on later-stage de-risked opportunities. Founders, on the other hand, benefit from patient capital and sector-specific guidance that specialist VCs can provide. In conclusion, generalist VCs amplified biotech's boom and bust pattern, while specialists offered steady capital and more consistent returns. In today's capital-efficient environment, biotech innovation will likely be led by those with domain expertise and long-term commitment. And that is why we believe that biotech specialists are uniquely positioned to lead the next wave of innovation and create lasting impact. Thank you for watching, and if you're interested in more insights, please visit our website. Until next time.